Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, October 21st. Firstly to gold futures, and here we see a continuation of the trend to the downside for today's trading. The previous day's trading we had an outside day in bar chart terms. That meant danger for the trend that was previously down, and we had the market set up for a potential change of trend there with a possible bullish harami pattern. No confirmation of that pattern. The high of the previous day was not taken out, and we saw the sellers continue in this market as they had in the day prior to yesterday's trading. With today's trading, we've seen formation of a fairly large black body candle, so a decent amount of net momentum to the downside between the open and the close. So the sellers have been quite strong in this market. They've also closed down between the midpoint level and of the range and the low, suggesting that the sellers have still closed with control, and they've shown some strong commitment by taking out the support level at 1170. That area has held as support for the past two trading days, previous resistance level, and breaching down through there in a bearish manner suggests that we're seeing some strong commitment from the sellers. Now the problem for the sellers was always going to be the Tenkan-sen support, and there is a possibility of buying coming in off this level, but as this new candle has opened, it's opened down below the Tenkan-sen, and that suggests that if we see the market rally, we may see the Tenkan-sen hold as resistance. Now the Tenkan-sen now is trading around that previous support area 1170, previous resistance area, and it could now turn into another resistance level at 1170, so watching that area very closely if the market does attempt to rally. A strong bullish close up above here would be in line with the market being bullish in the longer term and medium term time frames, but just looking at the depth of price action away from the Kijun-sen and the cloud, it does suggest that we are looking just a little overextended. Also the depth of the Chica span away from the corresponding price action is looking a little overdone, so any retracement here wouldn't surprise. Now just looking at the Fibonacci retracement tool, and we're examining the relationship of this current first time frame downtrend to the immediate previous first time frame uptrend, and the market has tested exactly to the 50% level. We have seen some price rejection from there. We do have a candle, however, where the sellers are in control, so not a great likelihood of us seeing a change of trend here. If we do see the trend continue down, the areas to watch are the 61.8% at 1157, and then down here at the 78.6 at 1147.8, which coincides with the Kijun-sen indicator, so very strong supports could come in down around that level if the sellers are strong enough to trade down to there. Now just looking at the Fibonacci extension tool, and here we see the market testing around the 161.8% level, being rejected from there, so we have the market testing to some important levels for today's trading, but the short-term dynamics aren't favouring a change of trend. If we do see the market breach down through the 161.8% level, the next one to watch is the 261.8% at 1145, just below where the Kijun-sen is trading. Moving next to NYMEX oil, and here we see a continuation of the trend to the downside today, a candle making a lower high and a lower low, another black body candle, so the sellers still are very strong in this market and coming off the resistance around the Tenkan-sen indicator, finding support at 44.78, just at the bottom of the Ichimoku cloud, and interesting trading for the next session with support just below 44.78 at the bottom of the cloud around 44.46, but resistance at the top of the cloud at 45.86. Possibility of a breakout soon. The direction, it'll be up to the market to decide, and what we want to see with the breakout would be either a strong bearish candle to the downside and strong bearish follow through, or a strong bullish candle to the upside and strong bullish follow through. Next to wheat futures, and following the formation of that bullish engulfing candle from the previous day's trading, we have seen confirmed change of trend today. The market making a higher high and a higher low, but finding some resistance at the 496.50 level. That's an area where the market has tested to previously. Possibility of the market trading up to the round number 500, and we could see some rejection coming in there. But on formation of a spinning top type candle, we've seen the market rejected from 496.50 to the downside, but also to the upside from the bottom of the Ichimoku cloud around 489. So What we're going to see potentially is a change of trend back to the downside here, but looking at very strong support at the bottom of the cloud, close to this 488 previous support level. Next to corn futures, and solid buying has continued in this market off the strength of the previous day's trading. The buyers took control that day and they've continued with control on a fairly strong candle. Trading within the cloud now suggests that we have a neutral market in the longer term time frame, but still bearish in the medium fast term time frames by trading below the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. The market today found support at this previous important level, previous support level and resistance level 376, and also resistance at 381. If the market does attempt to come off from where it's trading at the moment, looking to the bottom of the cloud, roughly about 378 to hold as support, and just outside of there, if we do breach outside, 376 once again may hold as support. If we break out through 381, looking to the Tenkan-sen around 383 to hold as strong resistance. Next, the US 30-year bond futures, and here we've seen solid buying coming into this market off the important support level at 157.12, previous resistance level and previous support level in the past, a very important level tested on multiple occasions, and once again solid buying coming in off this area. The buyers have matched the selling from the previous day quite strongly, with the buyers taking control of the market, changing the trend to the upside and breaching up through the Tenkan-sen in a bullish manner, suggesting that we certainly could see continued upside, but the market may be trading to within a zone of previous rejection, and we can see the shadows on these candles here from roughly about the 158.20 level up to the 160.31 level, so very strong resistance anywhere within this zone. But that doesn't mean that we won't necessarily see the market test to within the zone, so potential for the market to trade higher, but good potential for the market to be rejected from anywhere within this area. If we do see the market come off and trade down through the Tenkan-sen, which may provide support for the next session, trading at roughly about 158.07, we should be looking to 157.12 to continue to hold as support for the US 30 bond futures. And looking here to the bands, and here we see the market finding resistance for the third consecutive day within the bands, and the bands are starting to squeeze up, and it means that we should be preparing for another breakout in either direction. Watching the upper band here, roughly about 158.20 or so, 158.25. If we breach through there in a bullish manner and we see strong bullish follow through, we could see the trend continue further to the upside. Watching the middle of the bands, roughly about 157.27, and then the lower band at 156.31 to provide support if we do see any selling. And to the S&P 500 hourly futures, and here we've seen the market transition back into a dominant bear market in the longer term time frame by trading down below the Ichimoku cloud. For the past 4 or 5 trading days, the market has been trading above the cloud. Lack of follow through has seen the market test to within the cloud on a couple of occasions, previously holding a support, as it did for today. The bottom of the cloud holding a support, but then we breached down through there, attempted to rally up to the cloud. It held as resistance instead of support, and then we saw strong selling coming in with the second pivot point support level holding a support. At the moment, we've opened down below each of the Ichimoku indicators, including the cloud, and also down below the middle pivot point level, suggesting that we have a negative market here. If the market does rally, looking to some resistance around the middle pivot point level 2017 up to the Kijun-sen and the bottom of the cloud around 2021, 2022. If we do see selling in this market, first pivot point support level may come into play, roughly around the round number 2000, should be an area that may hold as very strong support, and then potentially down to the second at 1990.